Savis, welcome back to my channel, guys. So onto today's video, I'm going to be sharing with you guys some of the most successful investors in the world, the gurus of investing, the masters, the experts. So I'm going to be talking about them today. Specifically, I'm just going to talk about two of them that I look up to, which is Warren Buffett and Raymond Dalio. So as I was looking at their portfolios, I became interested in some of the companies they have invested in. So for each investor, I'm going to take just two. For Warren Buffett, I'm going to take two equities, and for Raymond Dalio, I'm going to take two ETFs from his portfolio. So firstly, let me start with Warren Buffett. We know that Warren Buffett is the wealthiest guy in the world. He became rich through investing because he started very small. He started very young. I think he started investing at the age of 11 or 13. I'm not really sure there, but yeah, he started investing very, very young. And he also owns this company called Berkshire Hathaway. I hope I'm pronouncing it right. So in that company, they always investing in companies that they think they have value, because Warren Buffett is known for value investing, and those companies are like Apple, CocaCola, Kraft. What do they own again? There's just so many companies. I think I'll put it here on the screen and show you the companies, some of the companies that the Berkshire Hathaway owns, right? As I was looking at his portfolio, I became interested in this company specifically, which is called Kraft. So Kraft is a company that produces, what do you call this, beverage, cheese, snack food. You can know it if you really love what do you call this, ketchup. So I'm always buying this ketchup at Walmart. It's written Heinz, so the brand label it's Heinz, but the parent company it's called Kraft, right? So let me tell you about Kraft. Kraft share price right now is sitting at $26.65, which is really reasonable. I don't want to lie. It really decreased its share price to $26, and the dividend yield, it's really high, dude. It's really high. It's sitting at 6.32%. That's as high as the company that I talked about in my previous video, AT&T and AbbVie. So they don't show. One of the red flag I saw with this company is that it doesn't show its PE ratio. It's important to show the PE ratio to know how the company is doing, but they don't show that PE ratio. And another red flag I saw about this company is that its earning per share, which is the EPS that I talked about in my previous video. If you don't know what a EPS is, please go back to my previous video and watch and learn what an EPS is. So their EPS, it's at a negative. It's -9. So this means that the company is losing money, honestly, because they're not earning anything for selling shares, so it's really not doing great. And I was looking at its revenues last year when they reported their earnings. When they reported their revenues and earnings, the revenue was increased from the previous year, but the revenue was at a negative, and that was a red flag. And my question was, why is Warren Buffett investing in a company that is losing so much money? He can lose his money. But then I came to a conclusion that he's investing in this company because he knows that its intrinsic value, which is what the company is really worth, it's really high, and he's buying the shares at a discount at this point because it's decreasing. When a company makes a turnaround and its share price increases, he will make so much money other than buying the shares at a higher share price. So right now he saw that this is the right time to buy these shares, and mostly so many people are looking up to Warren Buffett because he is the master of investing. So Kraft, I do believe it will make a turnaround, not only because Warren Buffett has invested in it, but it's a huge company that will make it around and still make money in the future. That's what I believe. That's how I see it. Even though they have an EPS of a negative, but they can always make a turnaround. So I saw that the revenue of Kraft was really high, but the the earning per share, was at a negative. It's because maybe they have so many debts and so many costs that all of the revenue goes to the costs instead of the earnings. So yeah, I am really considering buying into Kraft for me to buy it at a discount, so that whenever it makes a turnaround, I'll have myself more returns. So the second company that I took from Warren Buffett's portfolio is Coca-Cola. So Warren Buffett has been investing in Coca-Cola for the longest time. Pretty much Coca-Cola has made so many millions for Warren Buffett, and he's not backing out. He's not selling his shares. I think he still believes that Coca-Cola will still be here in the next 10 years, so that's why he's still holding on to his shares. The share price of Coca-Cola is standing at $55, and its dividend yield, it's a bit low, but it's alright. The dividend yield is 2.9%, which is almost the same as other countries, the same as some of the companies in South Africa. Mostly some of the companies in South Africa, they're running at this number of the dividend yields, like 2%, 1.1%. So yeah, that's what it is. So the PE ratio of Coca-Cola, it's sitting at 33.61, which is, I'd say, good, because an average PE ratio, it's about 20-25 there, but it's sitting at 33. So it shows a great potential of growing its earnings, and again, it shows a great potential that it's not really losing that much money because of its PE ratio. It's standing at a bit far from the average PE ratio, and its earning per share, it's 1.64. It's really low, but as long as it's not a negative, so this means that the company is not losing money, it's actually gaining money. So in 2017, its earnings decreased, but in 2018 they made a turnaround. So I'm really interested in investing in Kraft and Coca-Cola, especially Kraft right now, because if I buy right now, I'll be buying at a discount of its intrinsic value. So I just took two companies from Warren Buffett's portfolio, but he has so many companies that he is invested in, like Amazon. He invested in Amazon this year, so that shows great potential. So let's talk about Raymond Dalio. So Raymond Dalio is a hedge fund manager. He owns this firm that is called Bridgewater Associate. That is one of the biggest hedge funds in the world. So let me explain what hedge fund is. So a hedge fund is a bit similar to mutual funds. You get, when you invest in hedge fund, you go to a hedge fund manager, and when you invest in it, they will look after your investors. They will look after your investments, and you just do nothing. You just give them money, and they will just look after your investments and give you returns. But hedge funds are more risky, are more aggressive. They gain more money, they have more returns than mutual funds, but they have their similarities. But investing in hedge fund, not everyone can invest in hedge fund, because you have to have a certain requirement. You have to have $200,000 net worth that has been consistent for about 2 years. So there is a requirement when you invest in a hedge fund. That's why so many people don't talk about hedge funds. They'd rather talk about mutual funds, because mutual funds don't have requirements. You just invest if you want to invest. So Raymond Dalio, his portfolio is full of ETFs. So the first ETF I took from Ray Dalio's portfolio is called the Vanguard VWFTSE emerging market. I'll put it here to show you guys. So this ETF, it's a fund that tracks companies that are located in the emerging markets countries like South Africa, countries like South Korea, Taiwan, Brazil. I think Russia is one of the emerging markets. So they take all those companies, They take some of the companies that are located in those emerging market and then put them together into a basket, and then so that you can invest in that. So ETFs, they have a low risk than a normal ETF. I'm not going to explain what ETFs are again. This video right here explains what ETFs are for you. So we're not going to go deep into what ETFs are. So in this ETF, we have companies from China. So China is also one of the emerging companies, one of the emerging countries that are in this basket. So they also have China Construction Bank in this ETF. They also have the Taiwan Manufacturing Company. They also have Naspers from South Africa. They also have Tencent from China as well. I'll put the companies here to show you guys the percentage of all of those companies that this ETF has. And this ETF, it's always growing because these markets are always trying to find ways to grow. I don't know about South Africa right now, but I don't want to talk about South Africa right now because I'm actually disappointed in South Africa right now. So other countries like China, Brazil, South Korea, I don't know if South Korea, they took it out of an emerging market country, but it was part of it. There's just so many countries that are included in this emerging market ETF. So the second ETF that Ray Dalio invested in, it's the iShare IEMG ETF. It's also similar to the ETF that I just explained to you guys, but it's just a different company. Now, the first ETF that I talked about, it's from the Vanguard company, and the second one I'm talking about, it's the iShare ETF. So this ETF as well tracks companies that are located in these emerging market countries. So like I explained, China, South Africa, Brazil, Russia, I think it's part of it. So all those emerging countries that I have listed, and some of them that I didn't list, are all in that ETF basket. So they're similar, but they're just different companies. I'm gonna really look into them and purchase them as soon as I have some moolah. So yes guys, thank you for watching. I hope this video was really helpful for you guys. That's what I'm always aiming for, you guys to learn something from my videos. I just wanted to make this video as short as I could. So I'll see you next week, maybe when I talk about other gurus of investing, our fathers of investing. So yes guys, thank you for watching. I'll see you next week.